Hi everybody and welcome back to Crypto Simplified. In this video we shall be talking about Loom. It is a project that did shoot up a little bit not too long ago. It's pulled back a little bit and I was doing my research in the meantime while it was still up. So now I want to share this research with you, tell you what this project is all about. However, before I get into that, thank you all so much for the fantastic support. I really appreciate all the feedback you guys are giving me. Please keep it coming, and any constructive criticism, I'm always open to that as well. If you're new over here, I'd love to have you on board as a subscriber. If you're a regular subscriber, why not click that bell button and get some more updates from me whenever I upload a new video. Let's jump right into the video. What is Loom all about? So first off, let me start by telling you who this project is actually for. So the largest group will probably be game developers, and game developers who want to use the blockchain for MMORPG style games. So they want to make unique tokenizable items in these games that have their own value. So that is just one possible application of this. There are still loads of applications that we haven't even thought of exploring yet in the blockchain. But what Loom wants to be is the go-to solution for blockchain-based gaming. So while game developers are their primary target audience, there is still a lot of space for use in online communities, especially where censorship resistance is very important. People have issues with Twitter and Reddit for these sort of things because people can remove posts and remove tweets. Well, this will be a platform where everything is permanent and people's voices cannot be censored in any way. And that includes self-censorship. And then lastly, it's for developers of any processor-heavy applications that require off-chain scaling. I shall cover this part in more detail later on in the video. So first up, let's have a look at the problem, because we need to define the problem before we can talk about solutions. And the big problem is Ethereum's low throughput. Ethereum is a very secure base layer, but then when you need to do lots of things on top of the Ethereum network, things get a little bit difficult. Because of the low amount of transactions per second, you can get a huge backlog of transactions, especially if something goes viral like CryptoKitties did. If you've been in the space for a while, you might have known that CryptoKitties almost pulled the Ethereum blockchain and network to a grinding halt. Almost. It didn't actually do that, but there is potential for these really processor-intense applications to affect the running of the network. Another problem, and this goes more with the online community side of things, centralized services can implement changes without community consensus. So people can get booted off networks, people's posts can get deleted, they can get silenced, or they can just be put in a way that people don't see these posts in an organic way. People are on Facebook, you know that your Facebook feed is not really organic. Facebook decides what to show you based on how you react to it. On the Loom network, they want to create the possibility for people to have social networks that don't have this sort of censorship or fabricated timelines. And finally, on the last point, this is something that the Medium writers have dedicated an entire Medium post to. And that is, there are too many white papers in this space, but there are not enough live products that actually have a real world use case. Let's have a look at what Loom wants to do in order to fix these problems. So firstly, they want to create decentralized application-specific sidechains known as DApp chains. These sidechains can be hard forked based on what the community wants. So for example, if you have a small group in the community who wants something done one way and another group that wants to keep things the way they are, it's very easy for the people who disagree to start off their own blockchain. So that means the two ideas will run on the same blockchain until the community makes a vote in order to split off and go off in their own ideological direction. And lastly, regarding the white paper, Loom does not have one. Instead, they are posting a lot of Medium articles as well as, and this is a statement of pride for them, they don't do white papers, they do finished products and they ship code. So that leads us on nicely to the first question in your head, the overarching question: why the hell wouldn't you have a white paper? So in that Medium post, all links in the description so you can check it out. I've labeled all my sources. Loom thinks that white papers are basically just statements without accountability nor real world testing. Their logic is, how can you plan for something if you don't know the potential of the technology? So basically what they're saying is that white papers are a whole bunch of baseless promises that no one's really holding anyone accountable to. So people can release white papers saying all these fantastic big things, talking about 1 million transactions per second, but they don't actually have the code of the project to back it up in the real world. So that is a very fair criticism of white papers, in my opinion. However, I disagree with them when it comes to the actual need for a white paper. They tend to think that the white paper is totally unnecessary, and they also said on their website that they're too busy shipping code to have a white paper. Firstly, let me tackle that latter point. Too busy shipping code? Just go to Fiverr, search cryptocurrency white paper. You can hire a freelancer to do your thing for you. Of course, you need to get the freelancer to understand your project head to toe in order to write the white paper, but it's still very, very possible to do. It will not take too long to write a white paper, especially if you know the company inside out. All you need to do is give a statement of intent to potential investors, and that is where I think they've really dropped the ball. They don't have a defined roadmap. They don't really have a defined statement of intent. Companies that have released white papers and failed to meet those expectations, at least we were able to compare the expected progress with the progress that actually happened. A white paper, in my opinion, is absolutely essential in being a yardstick to measure progress. If you don't say you're going to do something, then we can't hold you accountable for that. So yes, while a white paper is not an enforceable document, at least it lets us know how the people in this project are thinking. So in my opinion, not financial advice, just my opinion, by not having a white paper, I think they're being irresponsible to investors by not letting us know what to expect. Yes, it's very cool that you actually ship code, but we need to know your vision. We don't want your tactics, we want your strategy. What are you planning on doing in the next year, 2 years, 3 years? Of course, you can say that no one knows where it's going to go, but you can at least try to plot out a map. So, rant over, I suppose. And let's go to another one of the Loom solutions, which is sidechains. So let me start by going all the way back to what a sidechain is actually all about. So a sidechain is, as the name describes, a chain that is not part of the main blockchain, but it is connected to the blockchain. So basically what a sidechain enables you to do is create your own custom rule set within a little isolated part of the blockchain so that you can experiment. Of course, that means you can rely on the security of the main blockchain and the stability of this blockchain, but you can also create your own little ecosystem where you can experiment and see what if we do this. Another major advantage of sidechains is that there are no gas fees. So you can actually spend almost infinitely within your sidechain depending on your consensus and all these other things that you have set in terms of your rules on the sidechain. People talk about scaling up their applications in a big way, and some people have suggested that sidechains might be the best way to do this. However, there is a big distinction between scale and scalability. A sidechain will improve scale rather than the scalability. And let me talk to you about the differences between scale and scalability. So, the main difference is increasing scale will increase the amount of transactions that your network can handle per second. This can be done in a few ways. The most common ways could be by increasing the block size, like how Bitcoin Cash did, or by lowering the block time. The downsides of this are the greater potential for mining centralization, because if you have the same number of miners, but more block rewards coming out, then there could be a bit of a problem with a few people holding a lot of the coins. There are other costs associated with this as well. I won't get into the details of this because I want to give you just a simple overview. On the other hand, if you look at scalability, it's all about increasing the amount of transactions per second while keeping the costs down. So the scalability topic is a massive talking point in the cryptocurrency community. And remember, scalability is really hard. If any company comes up to you and says, we can do so many more transactions per second than Ethereum or Bitcoin, take whatever they say with a pinch of salt and ask for a working prototype, because scalability is hard, especially on distributed networks, and Ethereum's working through a ton of plans to help with scalability, and Loom will benefit from these plans. So on this channel, I've spoken about sharding, I've spoken about Casper, but there are also other scalability things that people, really smart people by the way, working on these projects to try and make Ethereum better for business uses. Raden's doing that. Then they have this thing called Plasma, which will be another layer on top of the Ethereum-based security layer. Lots of people are looking at this problem in different ways. And the bottom line, though, all of these will benefit Loom and how Loom can actually integrate into the system to make people's networks run better. So let's look at these side chains a little bit more, because what you need to remember first off is each decentralized application is on its own blockchain. Therefore, if it's its own blockchain, each blockchain needs its own nodes in order to verify things on the network. So each sidechain can choose the consensus that it wants to implement. Currently, the Loom consensus is a delegated proof of stake. So that means that you need a few people who have a little bit more power in the system in order to ensure that the system is not taken over by malicious actors. Loom is very well aware of how the network effect works, especially projects on their own blockchain. So they have offered to spin up a few extra nodes just to help with the stability of projects, especially in their early stages. Of course, as projects and games and developments get bigger, they need to get more decentralized, and therefore as the decentralization increases, they get more robust and more resistant to 51% attacks. Because if you want to take over the system, you need over half the computing or staking power in order to start rewriting the transactions in the past. As we know, Bitcoin is almost impossible to 51% attack because it's so highly decentralized. So Loom wants to give their projects a bit of a helping hand in order to get them over to this point where they can actually stand on their feet. And lastly, the node rewards and the consensus rewards are just decided by the creators of the D apps. So whoever's in charge of it can choose either to work mainly on goodwill, where node holders earn nothing, or they can handle a percentage of transactions and get that as a part of a reward for keeping their coins locked up. So it's a very flexible system. So it just depends on the needs of the developers who are using this platform. That was a little difficult. I'm sorry if it was a little tricky. If you are a little confused about that, please send me any questions. I'd like to clear it up for you. So next up, let's have a look at the team. And the three co-founders, i.e. the core team members, are all fairly well accomplished, but most importantly, they are all developers. So from the top to the bottom of this project, you have developers and people who are competent in coding. This will help make things run a lot smoother since everyone is competent enough to see if there are any problems in the code. I've attached all their LinkedIn pages in the description, but I'll just give you a quick overview about what everyone is about. All coders, all very competent. The entire team is fairly young. James Duffy is a serial entrepreneur. Luke Zhang, former lead dev at BlockMason, pretty big company in the cryptocurrency space, and Matthew Campbell was programming the instant messaging on the Reuters platform. So that is a fairly secure encrypted platform. So everyone has experience in this space. So they all know what they're doing. And we got a little bit of a bonus because this team is based in Bangkok, Thailand. They are in a great space to actually have the government helping them, because Thailand are finalizing taxation on cryptocurrency trading and cryptocurrency gains. So they are going to have a very well-defined system where enterprises can come in and actually contribute to the cryptocurrency economy with the government's approval. So that is a huge, huge positive, and that cannot be overlooked. Next up, let's look at the token. And what you need to know is that there was no ICOs. It was a privately funded project. I haven't found too much information on who these private funders were, but they were also given a bonus by the Techstars incubator. And one of the members of Techstars is on their core team. So I'll look at the token economics a little later in terms of the supply and all that when I'm comparing it with the competitors. But what you need to know is that the token itself is a membership for the network. So the token grants access to the platform. If you own one token, you can access the platform as a user, i.e. if you want a game on their platform, there might be a way for you to access it if you hold any Loom. If you're a casual developer, i.e. you just want to see what this is all about, make a few test things, and maybe on a smaller scale with less of the pro features, you need to hold 10 tokens. If you're a professional developer and you plan to make money off this, you will need 100 tokens. So what does all this actually mean? Well, if you're holding a certain amount of Loom tokens, you get access to the Software Development Kit, or SDK. And this is basically a bunch of prefabricated ideas that you can always edit out for your needs, but it helps you launch your own platform on the Loom network. This SDK, however, is not yet available to the public. It's just available to a few people who are early adopters into this space, but it does have a lot of features that would be very useful for game developers. For example, they have the means for you to create ERC20 tokens as well as non-fungible ERC721 tokens. If you're unsure about what non-fungible tokens are, well, a fungible token means that every single token on the network is valued at exactly the same, and that is typical of ERC20 tokens. However, with ERC721 tokens, what you can have are different tokens on the same blockchain that have differing values. Think CryptoKitties, think potential for property sales on a blockchain where each asset has its own price and its own characteristics. So this enables people to create rare items on a game that people want to develop. Of course, there is smart contract support with Solidity coming soon, a hard fork manager, utility client, JavaScript clients, as well as the potential for you to choose your consensus on your sidechains. You can either choose a practical Byzantine fault tolerance or a delegated proof of stake. It's all up to the developers to see which would be best for each person's use case. The other SDK features are Ethereum connectivity, chain copying, and transferring between chains. So potentially you can have your own game on your own blockchain that interacts with other games that are also on their own blockchain. The potentials with that, I think, are endless. Next up, we have matchmaking as well as an online presence to show that you're online at this time. Messaging will come in later releases. Speaking of further releases, we have the 0.8 release next month that has Solidity support, so they will no longer be so reliant on Golang. And then in June, we have the 1.0 public beta release where all developers will be able to access the SDK, of course, at a fee. So now that I've spoken about all these things that these guys are planning, I've spoken about how they don't believe in a white paper, they just want to ship code and ship projects, let's have a look at the projects they've actually been working on. And I really like the way they've gone about this. So first up, they have these three things that I think can make up a base for the Loom project to get further development on their project. Let me explain. So first up, on the far left, we have a D-app coding school called Crypto Zombies. This is a way to help people learn more about this platform. So they'll show you exactly how it works through very easy to understand tutorials. Easy to understand if you are a developer, of course. Next up, we have Delegate Call, which is basically a question and answer platform that's decentralized. So the great thing about these three things is, like I said earlier, is that they're forming a base for further development on the platform. And the great thing is we already have further development on the platform. So first up, we have Adventures of Ether Boy in Blockchain World. It's a side-scrolling game built on the Loom network. We also have Crypto Zombies Battlegrounds, which is a game that is built almost exactly like Hearthstone, using uniquely identifiable tokens to symbolize the cards. Then the last one on the bottom is Crypto Zombies Rancher, which is like a Pokemon battle style game. So all these projects are based on the blockchain, and we do have certain parts that make them essential for being on the blockchain, and that is a uniquely identifiable digital goods and characters. So there is some implementation happening here, but of course this is just the tip of the iceberg. We have a ton more development still to come. So you can't look at a project without actually considering what the competitors are doing, and there are some major competitors in this decentralized application space. You got EOS, Lisk, and Stratus, just to name a few of the most visible ones. This is definitely an uphill battle for Loom. However, all these three are on their own blockchains to make their own decentralized applications. Loom is a bit of an add-on to Ethereum, and thanks to Ethereum's network effect, this could really work in Loom's favor. But in order to see potential upside of the Loom network, I'm going to compare it with EOS and Lisk. So Loom has a long way to go to even match up to these guys, and that's expected. Loom is a fairly new project. EOS is a top 5 coin. However, I have extreme reservations about EOS because their valuation is so high without having actually shipped much working product. And most importantly, we have companies and projects in the top 10 that have real world applications that have been in use for several years. With EOS's mainnet release, if they do not meet expectations, i.e. the expectations are real world changing applications, I'm pretty sure they're not going to have that 12 billion market cap that they're currently enjoying right now. So I think Lisk is a much more realistic target for Loom to aim for. So Loom has a long way to go to actually catch up to these guys, but if, let's say, it does even half as well as Lisk, that's still huge potential. That's over 6x potential on the Loom's current price. However, this of course does not guarantee that Loom will get that high up, but it just shows that where we can aim for in terms of buy points, sell points, and also hodling time spans. So you can always pause this to have a look at the numbers in more detail, and I shall head on to the next slide where I talk about where you can actually buy yourself some Loom. So there are two places where you can get these tokens. You can buy them for a little higher price on the Loom website, and that's only if you want to be a user and hold probably less than 5 tokens. However, if you want to invest big time into the Loom network or be a developer on Loom, then KuCoin will be your best bet because you can buy it in bulk, but there is the downside of KuCoin's withdrawal fee. So there are two different places for you to get them based on what you actually want to do with the tokens. However, that being said, since it's only on KuCoin right now, when there's a future listing on other exchanges, the price could really skyrocket. So there's my research. Let's sum all this up in a nice quick way. So we have not too many pros or cons over here, unlike the last projects I've been working on, because this is actually quite a niche project. However, a big positive is that this is a very lucrative niche and that they have a working product that is enforced by a very developer heavy team. Everyone in this team is competent in coding, and everyone can contribute to making sure that this project is bug free and stable. The low availability, i.e. it being available on just one exchange, is an absolute plus for me, because the moment it gets on other exchanges, the price is potentially going to go up because all the people who got in there early will want to profit from it. Then next up, looking at the neutral attributes, this development facing nature of the Loom network I think will be a little alienating to a lot of the investors who don't know too much about the technical side of this cryptocurrency, but I think it has a potential for lots of power users in the software development world. So what we know for a fact is that in networks and markets, there's always going to be a small amount of people with a lot of the spending power. So if these devs have a lot of money to spend and they're totally sold on the project, this could potentially be a really good thing in terms of price action. However, there is no guarantee based on the small user group that it's targeting. While the team is very competent in what they do, I don't think they're exceptional because of the lack of FANG or Fortune 500 experience. And lastly, when it comes to the negatives, the competition in this space is absolutely rabid. But if Loom can carve out a niche for themselves, it could work. However, there are lots of much more visible D-app projects in the crypto space right now. And of course, I got to bring this up again. There's no defined roadmap, and the lack of a white paper almost makes them less accountable. Of course, the pro is that they don't have all the pressure of expectation, but I do think that if you want to release a project to a decentralized world, you need to be held accountable in some sort of way. So I think that's a fairly major negative on their part. And then, now that I've told you about all this, told you about the project, of course, you should be doing your own research before making any investment choices. I'm going to talk to you about my entry and exit points. I don't have an exit point, but I do have an entry point, and it is very close to where we are right now. I'm trying to lowball the market a little bit more because getting more bang for your buck is exactly what you want. So at 0.000375 Ethereum is where I have a buy order. I refrained from buying as it was dropping because I did think that this was a bit of an overbought asset. If you look at the moving average over there, I think that is a 25-day moving average, then we are currently below that. And whenever we're below these moving averages, I tend to give these coins a little bit more attention, because people who wanted to take their profits have taken their profits, and now people are scared at the plummeting price and they're overselling. And I think this is a great time to buy. Of course, I'm not a financial advisor. Please do your own research before any of these investments. But I'm bullish on the long-term future of Loom, and I think the price right now is fairly attractive. So on that note, that's the end of my research. I do hope you liked this video. Do leave a like if you did. Do leave me some constructive criticism if you didn't. If you're new over here, I hope this video has convinced you to subscribe. I'd love to have you on board. So that's it from me. This is Mark from Crypto Simplified signing off. You folks take care. Have an awesome rest of the week. Laters.